Hello everyone. We had our long-awaited FOMC meeting today at 2 p.m. And as expected, Jerome Powell did announce 25 basis points rate cut tonight overnight on Wednesday night. So tomorrow the new interest rate is going to be 3.75 to 4%. So they're coming closer to their target rate, which is going to be 2.5%. They're still pretty far away from it, but at least they're making an improvement towards their goal. The entire market, the economy, the analysts they were all expecting a 25 basis point rate cuts at this FOMC meeting, and of course, we're also expecting another 25 basis point rate cuts on December 10th. Moran was of the opinion that we should have done a little bit more than 25 basis points, but there was one other member, I forgot his name. He was of the opinion that we should pause the rate at least for one cycle and not cut any rates at all. But Jerome Powell obviously understands that labor market is declining, and we don't know how bad the labor market is going to be because we're not getting any data due to government shutdown. Once the government shutdown is over and we start receiving the labor market, I think that's going to be a bearish catalyst for the market, because certainly it's going to be a shocker for the market and the economy, because right now it's like when you can't see something, you can't picture it, kind of. But then once the data is in front of you, then everybody is going to panic. But at least in the short term, it's bullish because Jerome Powell has announced a rate cut, 25 basis points, and he also said December rate cut is not out of the question right now, but he's not 100% sure if he's going to do a 25 basis points. So initially, market and analysts were expecting there was 96% of percent probability of a rate cut in December, but now it has declined after the meeting to 67%. Last time I checked, it might have gone up or down. It's been a few hours since I checked it last time. But anywho, it has declined significantly. But in my personal opinion, I think they're going to do a rate cut in December as well, because Jerome Powell does realize that he may be already a little too late, and labor market is kind of giving him a hint that we should cut the rates. Inflation is still high, but they have to kind of bring a balance into the economy. So 25 basis point rate cut is going to be a very good change for the economy and the market as a whole. So it's very common today. The market was down pre Jerome Powell meeting, which is very common for past 3 or 4 FOMC meetings in a row. That's exactly what the pattern has been. The market declines before Jerome Powell speaks, and while he's speaking, it fluctuates, and then after he's done talking, suddenly the market is kind of skyrocketing, and that's exactly what happened. The other thing I want to talk about is earning reports. We've had multiple earnings today. First of all, I want to talk about Microsoft. They had very strong earning today. Even as it faced an outage of its cloud computing service, which is called, I don't know how to pronounce it, Azure or Azare, whatever you want to call it. The earning come after a deal with OpenAI, which kind of pushed a valuation of this tech giant to at least worth $4 trillion. But despite the significant, increasingly great earnings, the stock fell 3.4%, which I think is kind of sell the news kind of event, sort of. But in the long run, it's bullish for the company. The other earning I want to talk about is Meta. Meta's it takes a $16 billion tax hit, and it had an earning miss by a wide margin. And this tax bill was related to Donald Trump's beautiful big bill, which they had to pay in one lump sum in the third quarter, which is why their next year's forecast was much lower as well. So stock has plummeted, of course, because their earnings had a huge miss. The other one I'm going to talk about is Chipotle. Chipotle has also reported its earning, and it sinks after it cut its full year's sale outlook for the third quarter in a row. We all know the stock markets run on outlooks. People are looking forward to what the plans are going into next quarter, next year, or next 5 years, whatever, and that's how the markets react. Its market is always 6 to 9 months ahead of today's situation. They're looking forward to what's going to happen 6 months to a year from now, but they are canceling their outlook going into, and this is the third quarter in a row they have not given any outlooks. Therefore, the stock has plummeted 13%. The stock is already down 34% year to date, which is not good for Chipotle. I know it has been going up significantly in the past years, but I think this is not the year for Chipotle, and we understand why. The inflation is high, consumers are suffering, and tariff don't help, and now the government shutdown is obviously putting lots of pressure. There's so many people who are that survive on food stamps and benefits, and now they're not getting paid. They have also there's a term for when they get the cash benefit. If they don't have a job, they don't have that, so people are suffering to pay their basic necessities, and therefore, these kind of companies which are directly affected by consumers, they are obviously losing their sales and ultimately their revenue and profits. The other company I want to talk about is Caravana. I'm not a big fan of Caravana. I don't think their business model is that appealing to me, so I never invested in Caravana, but I know there are some friends of mine who are hardcore followers. They think Caravana is going to go to, like, I don't know, moon or something. So I thought I should just make a small update on Caravana as well. Caravana has also reported its earnings today, and they had the highest revenue in years, about $20 billion annualized rate, despite strong sale. Earnings per share fell short of expectations. So even though they had $20 billion yearly revenue growth, but their earning per share fell from the expectation the Wall Street was expecting. It has its adjusted EBITDA margin declined, which shows that operational difficulties do exist, and that's why I don't like Caravana's business model, because their business just doesn't make any sense to me. I don't think it has that much potential to go further higher. I think it has reached its peak. It could still make revenue going into a few other quarters. I might be wrong, but this is just something that I'm just not interested in, so I don't really invest into Caravana at all. I never even felt like I should even look into this. So what's my take on this? Of course, I'm bullish on the market in the short term until December. Once the government shutdown is over and we start getting the job report, that's going to be a shocker for the market and the economy, and that could plummet the market in the short term. But going into the end of the year, I think stock market is going to do well. If you watch my videos regularly, I told you that my goal for Nvidia is $245 by the end of the year, and I think it's it's moving steps closer to my price prediction today. It jumped to, if I remember correctly, $215, I believe. So I'm not that far away from my goal. Those of you who were skeptical, when I give you those price targets, of course, I do lots of research in the background before I give a price. I knew it was a very aggressive price target for Nvidia, because these kind of large cap companies don't move that fast, but Nvidia's growth and business model is just significant. Like Microsoft, they made most of their money. It's a $4 trillion company, and most of their profit came from the investment that they did in AI. Regardless of people are afraid that we're in an AI bubble, even then their growth is there, and those businesses are doing well. Same thing with Meta. Meta has invested lots of money in AI as well, but they obviously missed because they had to pay $6 billion in taxes, which is a big amount that goes out of their budget for their expenses, and that's why that company has not beat the expectation. But overall, I think Meta is going to be profitable. Microsoft, of course, is going to be profitable. We know that Amazon has laying off lots of people. Walmart has announced layoffs. I saw one other company laid off 1,000 employees too. I forgot the name, forgive me for that. But there are lots of people who are losing their jobs, and the reason being is AI is going to take over. It's going to cause lots of unemployment in the economy, and ultimately it's going to affect lots of things. Particularly people's personal lives are going to be affected by this unless they develop their skill set and pursue a different career path for themselves. Sometimes people are not in the position to start from scratch all over again. So they might have to come up with a strategy, which is is easier said than done. So we are entering into a new era of human civilization, and I think it is going to be a game changer for so many people in good ways and in bad ways. So let's just plan accordingly, do our due diligence. Don't just follow people blindly, and see how you can improve or increase your income, and how can you grow your wealth and then protect your wealth, of course. That's my update for the day. I just wanted to let you know that I'm bullish in the short term on these tech giants, obviously, and also the stock market overall. We know the Nasdaq's been doing well. Also, we saw the 10 years bond yield went up today as well, which I was expecting that if there's a 25, like if Jerome Powell announces rate cuts, the yield are going to go up. And that's exactly what happened. Now, 25 December rate cut is questionable. I think they will announce 25 basis point rate cuts. But of course, now the market analysts are going to keep talking about it, like, oh, there should not be rate cuts and all this and this. But you know me, I know Jerome Powell is behind, 2 to 3 rate cuts behind. They should have started earlier, but I'm sure they had their own reasons. They just didn't want to lose their credibility. Cut, pause, or not cut, or raise. They just didn't want to go through that roller coaster. They wanted to make sure that they have enough data before they actually decide to cut rates. So please be careful, invest safely, don't risk the money that you're not willing to lose. Take care and goodbye.